Hello and welcome to ET Now. I'm Ashwin Mohan and you're watching Amicus Curiae, your weekly guide towards brewing in the world of corporate law, tax and regulatory affairs. And with news trickling in with every passing day on the GST or goods and services tax, we have with us yet another big global voice on the show this week. David Raistrick, global leader Indirect Tax at Deloitte. He heads a team of 3,500 indirect tax professionals who form the world's largest indirect tax network. David, thanks so much for stopping by and joining me on the show this week. For starters, give us a sense of how the perception of India has changed in the global community after the Indian Parliament gave the nod to the GST. And I'm asking you this because we all know that India has a very complex and complicated political landscape.
I do think that the GST reform, which has been quite a while coming, is something that is politically and historically important. If you look back in 10 years' time, I think it's a great thing for India, and I view it very positively. In terms of the wider global community, I would say it's seen in a similar light. If I look back over the last few years, non-Indian corporates looking to do business in India have always been concerned at the level of compliance, the level of difficulty, the range of different indirect taxes that they needed to handle and to deal with. One GST regime such as this is great news. It certainly makes life easier for everybody, and the beauty of it is that this follows the global norm for indirect tax. So to that extent, I think it's a great place to be, and will make it far easier for business. I mean, perhaps the only thing I would add to that, if it helps you, is it is very complex. It's not an easy tax to implement, and when you look at that, this is probably one of the shortest timescales I've seen to introduce a new tax such as this. So when you look at an economy the size of India's, that's going to be a challenge for everybody. Now, I would have to then say I have never seen a government as well prepared for the introduction of a new tax or a new GST as I believe the Indian government is. I think it's phenomenal what they've done. I've read with great interest all the real details. The FAQs, for example, are many pages long, will be dynamic. I think there is real preparation taking place.
David, from an investment point of view, many in the industry believe, domestically at least, that the introduction of GST will lead to a rise in investments from overseas jurisdictions, especially in sectors like automobiles and heavy engineering. So do you concur with that school of thought?
It's a great question. Sadly, I don't have a crystal ball, so it is hard to know for certain. But I think it must help. So I would concur. At the end of the day, nobody really knows, and the range of different economic factors which all come into play. But the mere fact that there is an easier tax regime for corporates to do business in is definitely a positive. At the same time, and we should focus on this as well, one of the many concerns is the cash economy and whether people are behaving properly, paying the right amount of taxes, how easy they are to contract with and work with. I do believe that the GST regime will help to reduce that cash economy, and as a result will give overseas corporates more comfort and more security when they want to come to India to do business. So yes, overall this should increase inward investment.
Now on to a precautionary note, David. What are some of the safeguards which you think the Indian government should keep in mind before rolling out or executing the goods and services tax regime? Because it's clearly going to be a cumbersome exercise not only for the government, but it also will involve a lot of changes from India Inc.'s point of view. Many companies will have to revamp their entire structures. What's your experience been so far as the emerging economies go when it comes to GST?
So, great question. Safeguards is a part I will answer second. Firstly, I would say most governments have looked to introduce a form of leniency for the first, usually 12, sometimes 24 months after the rollout of a new GST. The reason for that is simple. People will try hard, but for a range of reasons they won't always achieve 100% of what's required. Now, having said that, you need to bear in mind there will always be somebody who will, perhaps for fraudulent reasons or other ones, not comply, and I would not advocate leniency there, but I would very strongly urge the government to look at being lenient where people have tried and for whatever reason, it hasn't quite worked out. So I would very much say that has to be a part of the process.
Point taken, David. Now, recently, the new RBI governor in India, Urjit Patel, held his first monetary policy, and there's a very interesting signal during that policy. And during that entire policy interaction with the media, the RBI gave a thumbs up to an 18% GST rate, and their theory was that it will have a short-lived impact on inflation. What do you make of this suggestion coming in from the central bank?
That's a dangerous question to answer, isn't it? Because people will come into either one of two camps. They'll either think it's too high or too low. My personal view is it's actually fine. At the moment, there are a range of different, if I could call them hidden indirect taxes that the average consumer doesn't see but are built into the price. So now we have a single rate of 18%. It's actually building in those other taxes anyway. So it's not as onerous as it might at first seem. Do I think it will lead to inflation? I don't. If I go back to the financial crisis 5, 6, 7 years ago, we saw a range of rate increases and decreases at different points in Europe, which had an impact on tax revenues but didn't seem to have a massive inflationary increase. It settled out, so I don't think this will lead to an inflationary spike. What I do think it will do is lead to improved GDP for the Indian economy, because it helps to simplify the process for businesses to pay their taxes and administer their taxes. Yes, there will be an initial burden. Yes, there will be difficulty for businesses to get their systems set up right, in place, doing everything they need to do. We need to accept that with any new tax there will always be a period of pain. Once that settles down 12, 24, 36 months in, then you will start to see business improves. They can go about their business much easier. The economy as a result picks up and GDP increases. So I actually see all of this in a very, very positive light.
David, you're an indirect tax veteran with over 25 years of experience across several countries. Give us a sense of what are some of the current ongoing international trends when it comes to GST or goods and services tax, and are there any areas relating to what's going on in GST in other countries on which India specifically should keep an eye out for?
So there are two different ones which are linked. One is around fraud, and the other one is around automation. We have seen, particularly in Europe, to a lesser extent across Asia, although it has started to appear in the last couple of years, an element of fraud with people trying to create bogus transactions and take money out of the GST, VAT regime. I don't think that will be a problem here. The reason for that is the invoice matching that is being put in place, which will help to both, firstly, drive compliance, but secondly, it will work really well to help the cash economy to disappear, because if somebody doesn't pay their taxes, you on the other side don't get the credit for it, therefore you would stop dealing with that supplier. So it's a great way of assisting. That trend is one which India will hopefully avoid. The other and far bigger one is automation. As we're seeing automated systems, we're seeing far more data than any time ever before. We're seeing governments share data with one another. That again is a trend which I see India is on top of. As with the invoice matching, I would say we are going into this with a very automated, IT-driven tax process. That can only but help, albeit again with the potential for initial teething problems. But once they are dealt with, I see us in a strong place. So overall, those two trends are easily covered. The only other one I could mention, and this perhaps plays to your earlier point on the 18%, we've seen GST rates rise around the world for probably nearly 30 years now. I think we're in our 29th year of GST rises in rates. The average, according to the OECD, last year was 20.7%. 20.7. So India at 18 would actually be below that. We have seen an increase and a rise in rates. The reason for that is quite simple. Government needs a certain amount of money to function and to do all the things it does, and it's becoming increasingly difficult to forecast accurately the level of income taxes paid by business on their profits. Indirect taxes have therefore risen as a result because they're a more stable base. Consumption is something which is not only rising, will definitely continue to rise in India. Consumption overall as a nation, but something which is broadly able to be worked out in advance. We can forecast the level of consumption. We can therefore forecast whether it's goods or services, the overall level of tax that will be received. So to that extent, that also helps and supports. And overseas, the rate has gone up as people try to scrabble to take the taxes from indirect. We actually, I should probably just continue. We've actually seen GST probably reach a maximum in the more established regimes, such as Europe, at the early 20s, up to 25%. When it does, we've then seen a range of other environmental taxes come in alongside GST. India is not at that stage here, obviously GST. So my prognosis would be, given the starting rate, we'll see stability for at least 5 years, and beyond there it's difficult to forecast.
David, I'm sure you've been very closely tracking the indirect tax policy in India because it is an important market for Deloitte. What's unique about the Indian tax regime? Anything different in India's GST tax regime when you compare it to other countries? What's the USP?
Yes, so to answer the question, there is a few unique USPs for India, and I've briefly touched them already, but they are around the invoice matching to make sure that your customer pays, and around the compliance rating, which is equally tied into that. I think this forces business to make sure that its own suppliers are compliant as well as itself, which is quite unique to India in the way it's been rolled out. At the same time, the invoice matching is quite unique. It will definitely lead to a bit of upheaval for the first few years, in my opinion, but at that point you will probably see far more compliant taxpayers and far fewer people trying to avoid paying tax. That is very different. It is something which India is definitely leading the way in. If you were to ask me, do I think we will see that taken up globally, I would say the other tax communities around the world are watching in India with interest, so the eyes of the world are on you for that. If it works, I can guarantee we will see this adopted elsewhere. To me, it's a very clever, if not initially fairly difficult and onerous way of ensuring we have a safer tax base. So yeah, that is a very, very unique Indian proposition, and one which ultimately technology will allow and drive forward.
David Raistrick, Global Leader Indirect Tax at Deloitte, thank you so much for taking out time and speaking exclusively to ET Now.
Thank you very much. All the best to you. Bye-bye.
On that note, we'll have to slip into a short break, but don't go anywhere. We're going to get yet another global voice with some fresh perspective on the entire IPO market and how it's booming so far this year.